Hello guys, it's another market update from the trading plan, and we're going to start off by looking at the SPX, or the SPY ETF. So as I mentioned last week, we got a bounce off of this level here, which was acting as strong support from this black trend line here, from basically from 2016. And now that we do have a bounce higher, it looks like we are probably going to stall here for a bit, at least in the short term, because we are at the 61.8% retracement level, which usually is a good area of resistance. If we look at the QQQs, which is also the Nasdaq ETF, we are actually at the 78.6. So this sector has been performing much better than, I guess, the S&P 500. So basically, what I'm looking for now into this week is probably a little bit of consolidation of the recent gains that we've seen, and potentially maybe if we can form a bull pennant pattern, maybe test the, I think the 50-day moving average would be somewhere around that. But yeah, so 50-day moving average is right there. So if we can test the 50-day moving average, or potentially even the 100-day moving average before we do go higher. Now, last week I did mention that the most likely scenario is a double bottom. So this is my preferred scenario, but the market doesn't really care what I think. And so we're just going to have to watch and see what happens if we get a test of the 50, and if some of the stocks are setting up nicely, then it would be a good spot to go long. So I'm open to any of these possibilities, obviously, as long as we don't break below this trend line. The other thing that I'm keeping the back of my mind is we do have a time cycle high coming up on Monday. So Monday being market being closed, it'll probably be Tuesday, and there's also another cluster of turning points coming up on the 23rd. So I'm just going to keep this in the back of my mind. These are just experimental, I guess, time studies that I have, and the next turning point that's coming is on March 6th. So I'll just keep that at the back of our minds. So because we're not too sure what's how this correction is going to unfold, are we just gonna bull flag here for a bit, or are we going to make a double bottom? The best way to position yourself sort of in this market is to look for stocks that are showing relative strength. So one sector that I particularly like is the semiconductor, and the reason being, over the past 18 years, so since 2000 highs, we recently only broke above the highs, which is around the 105.85 level. And basically this is a long base, and usually when a stock or a ETF or whatever it is breaks out of that long base, you usually get like an accelerating uptrend that follows. So we have this blue line here, which was the all-time highs. We broke above it, so we've made new all-time highs, and because of the correction we did come lower. So if we do manage to again break above this price, then I'm expecting to see some more upward momentum, and looking at the names within this sector would be a good way to play this next run that we're probably going to have in the next few months. Another I guess sector that I'm looking at is the emerging markets, and the reason I like the emerging markets is we've basically broken out of this bear market since I think 2007, and we recently broke out of it, and we're above the 50-day moving average. So we just came back to test the 10-day moving average during this correction that we've had. And so this is another name that I'll be looking to go long. We do have a low on the stochastic. Similarly, we also have the China Etf, which is it's a very similar looking chart. We have sort of a base that's forming, and let me see if so basically we broke out of this, I guess, downtrend or bear market, if you want to call it, and basically during the correction we came back to test that breakout level right there. So yeah, this would be a good position to add. Obviously, keep your stop loss probably below some of these levels. And so these are some of the names I'm looking at. So the way to position yourself is, you can look for stocks that are showing relative strength. So one example is Team. So team, did not give up any games. So if you just compare this with the S&P, and we'll get rid of these here. So if you compare the decline, right? Look at how much it declined here compared to the S&P 500, and it pretty much gained back that whatever it had lost, quickly. Another example would be Hubs, right? So Hubs is basically making new highs, and while the S&P is sort of at the 61% retracement level. So there's so many ideas like this. There's SPLK, right, making new highs, still above the 50-day moving average. So out of the FANGs, Netflix, sort of this V sort of reversal, if you want to call it, is already near all-time highs. Amazon has been acting well. The other FANG names, so Facebook is not doing that well, so this is not something I don't want to buy right now, although it could go up, anything can happen, but I rather position myself with stocks that are showing relative strength. Apple is also, it did come down quite a bit, but it is recovering. But my favorite out of the FANGs is Amazon and Netflix. Some other names, Snapchat looked like it had good earnings last week. It's breaking out of this, it broke out of this base and came back to test some of these support levels, and now it looks like it's going higher. Twitter is also a very similar setup. It's recently broken out of a base. If we go to the weekly chart, right, it's broken out of a base, and notice how during the correction it actually went, I think it went up. Yeah, so Twitter was actually moving up prior or while the S&P was going down. So that is what you have to watch during corrections. When you see stocks that are moving up when the market is going down, those are the ones that tend to outperform, and that's exactly what we saw after the earnings. Another example of stocks that sort of was acting more positively during the correction is Roku. Like Roku currently doesn't have earnings or positive earnings. They have high revenue growth, and if you notice, when the market went down, Roku barely went down, actually went up. Right, so market came down a bit, so it did come down, and then the last few days there were a lot of buying. Roku, we are sitting on this resistance line. We have a double bottom here. We have earnings coming up, so chances are we're probably going to pop higher after earnings, just based on the technicals during this correction. So some of the names, as I've mentioned, look for relative strength. Another name here is ACN. Again, ACN is making new highs. So I guess we're just gonna have to wait to see what the market does. As long as you position yourself in stocks that are acting up well, you should be doing okay. And just keep in mind, we're probably gonna see a little bit more volatility into next week, and hopefully if we can get another tradable bottom, then we can accumulate some more positions. Thank you guys for watching this market update from the trading plan. Stay tuned for more videos.